Welcome. This is the Trading Pit on August 8th. Here in the XC studio is Benjamin and Amit of JLabs Digital. I am your host, Marconi White. And man, after Monday's brutal sell-off, the majors have rebounded. And I'm asking, is it time to buy the dip? But first, it's rapid fire where I look for simple answers to complex questions. And man, we got some dingers here. Benjamin, are you ready? You're in the hot seat. Let me hear some of that fire, some of that rage you have in your belly. Well, silence doesn't really help with that. Are you there, Benjamin? Nope. We have a little bit of silence here. All right, Amit, are you with me?
Yes, I am.
Okay, well, you're the first up then. You have no choice. Question is, we have the Japanese yen trade, jump trading, selling, or jobless claims. Which of the three had the biggest impact on this week's selling?
So jump trading came in later. This domino effect started with your PMI data coming in. That was exacerbated by jobless claims. And then the yen trade started to unfold. So it's not unfolded completely yet. Sources say it's just halfway through. So we'll see some more impact at some point.
So of the three, are you saying it's a cascading effect? I get that, but are you saying one of these is the main culprit? I feel like the Japanese yen trade really has the aces up its sleeves.
Yeah, but that has already been reverted. So don't see it big impact coming in because it has a major impact on the global market. So it was back traded straight away.
All right. So, we'll have to see if that comes back to bite us. I know Ben, who's sitting in the audience quietly, has some opinions, but we'll have to let him stay silent for the recording. Benjamin, are you with us?
Yes.
Oh, you're back from your tea break. Okay, glad to see you could join us. So during the sell-off, everyone's asking what they should have bought. Is it BTC, Solana, or Solana meme coins?
BTC and Solana.
You have to choose one of the three. I can't just give you. We have rules.
If I would still go for BTC.
You still go for BTC?
BTC.
Okay.
I would go for Sol.
Oh well. Oh, okay. We're gonna get a little bit of head-to-head, tete-to-tete, a little bit of conflict. All right. Well, we'll bring that up. I want to hear a little bit more about your thesis there. Amit, the SEC loses its case claiming Ripple is a security. Is this really the beginning of the end of the SEC's fight against crypto?
Not really. They will find something else. They won't stop.
They won't stop. It's in their nature to dig and dig for that crypto bone. Okay. All right. Well, there you have it, folks. If you're planning for the SEC to get a turnover after the election and stop fighting crypto, it's not going to happen. Amit just said so. And Benjamin, last question here. The Solana ETF is approved for Brazil. What's the odds that Solana raises more capital than ETH in year one?
Well, I think as far as ETFs are concerned, ETH will continue to gain capital, but it won't make any difference at all with respect to price action because there is constant selling from so many entities, right? Whether it is Jump or Vitalik or Ethereum Foundation, or suddenly we had the Plus token scam. So there's a lot of supply overhang for ETH one way or other. When it comes to Solana, the difficulty is pretty much the FTX and Alameda overhang, and Solana is much more active. So.
All right, so not a definitive question, not a definitive answer, rather, but it sounds like
ETH can raise more capital, but Solana will still end up being the king.
Into the king on the price level. All right, well, let's actually get into that, the price action, because I know anybody who's tuning in is really curious about where the market goes from here. We obviously saw a massive sell-off this on Monday and really over the weekend for crypto. Many of the majors were down, 20+%. I think Solana really took the lion's share, the brunt of that. I think it's low. It touched on 110. BTC touched at 49,270. And what I saw from Ethereum was about 2,100. They're now all up. BTC this morning was trading at 57.58K, ETH at about 2,500, and Solana at 155. It seems to have done the best rebounding across that. And when I looked at some of the ETF information, we saw a little bit of mixed reviews. BTC had several days of outflows at about $500 million. Yesterday was positive. Ethereum had a couple of days of inflows. It was over 147, maybe it was closer to 200 million. I got to check my numbers there. And then yesterday we saw some outflows. So I'm curious, guys, and Benjamin, I'm going to start with you. From a structural perspective, what are you seeing with BTC after the sell-off on Monday? We obviously have the macro side of it, which is the Japanese yen trade. Maybe it's wrapped up. Maybe there's still some to go. There's now a lot of discussion about what's going to happen on rate markets. We're not going to get into that. Strictly looking at BTC, what are you looking at the structure there? Is this a time to buy the dip? Are you still waiting on your hands to see where the market takes us?
So from the structural perspective, first thing that comes to my vision when I look at my chart is we are still within the trading channel that we had for weeks for now. We had a huge deviation down to 50K, of course, but we also saw a lot of buying happen over there. With
Hold on one
existential-
second. Benjamin, apologies. Producers, can we bring up the chart? Yeah, there we go. Okay, I'm seeing it now. Fantastic. All right. Yeah. So walk us through what we're seeing there here.
So we had deviation. We had a very quick deviation below 50K, and then price bounced off. There was very good spot buying. We basically obliterated a lot of open interest. A lot of longs were basically caught off guard because nobody expected that after hitting 70K that again we are going to go back to 50K level. So that's a $20,000 drop within a matter of a couple of days. It was not expected by a lot of people. That's why we had a lot of long liquidations, and on this pullback we did not have sufficient short liquidations. So this is as per the liquidations, that is one thesis. But the thing is, if you see the price action, we have lost the 200 daily moving average level, which is a big cause of concern, even though we have good support levels below. So the confirmation that the bottom for this entire run is done is only if we recover 62K. When we recover that, we can be much more confident that, okay, the bottom is definitely in. But until then, we can go back and retest 50K. We can even go back and retest 49K, form like a bullish divergence and so on. There's all odds. And keep in mind, it's still Q3. So, there is no reason we should start mooning in Q3. It never happens almost. So the odds are that we still chop around. We probably test the 62K levels as a resistance. And then if we go down to 50K, that might be bad. So you don't want to go and test that zone and then go back to 50K. So you basically want to chop around here much further and then run up. So if we are going to do a V recovery, like what Twitter has been, all the Twitter analysts have been confident 100% about, if we are doing a V recovery, we need a daily close above 62K before this weekly closes. If that does happen, then we actually have a realistic shot at breaking 70K this time. But until then, just trade, just trade the range, just like Amit says, for a surprise. That's what I would be doing this time.
Okay, so you got your line in the sand at 62K. We have to see that recovery. And then if that doesn't happen, you're looking for some price targets below that, maybe in the 40s, obviously 50, 40s, and then from there we'll have to reevaluate.
Yeah. I mean, it's already good that we have recovered 57K level. It was a few support levels on a horizontal level. And we had extremely good signals during this drop, actually. We had rosy alert, which basically signals very rarely on BTC is concerned. It often signals, but on BTC is very rare. And that signaled. And then we have a few other models from JAI, which basically signaled the bottom around 50K. So quite a lot of signals came in, which basically has told us that, okay, 50K would have been the bottom for now. But we have to hope that we get a bullish divergence. The reason is then it basically strengthens the move to run up in a better way. Rather than trying to get a V recovery, I would go for a retest model which basically confirms that if we go back to 50K again, that will act as support. So if there is not enough support there, then it's a big problem.
Okay. Ahmed, I want to bring you up here and see how your analysis contrasts with what Benjamin just shared. Ben Lilly just put out a great article yesterday talking about, he said, I think it was Bumpy Ride is the title of it. He was talking about order books are showing some strength because the bids have not disappeared. He also talked a little bit about some of the whales that did initially buy in. The orders around 100K to 10 million were accumulating size. That seemed to taper off. Are you seeing anything from an order book or order flow perspective that gives you confidence that the sell-off is done and we're ready to move up, or the opposite?
I think sell-off is done. I think we won't go below 52K.
All
And
right, coming out there
Benjamin
bold
is
and
saying-
hot.
Yeah, as Benjamin is saying, we want to see 52K retested before it goes up, because that will give you the momentum. And if you can see on the chart, right? So this whole sell-off is driven by liquidations. No trading happened here. So that's what you want to see. Trading happen in this range. So the ranges I'm looking at from 57 to 52 or 57 to 62. And that's where we talk about. So even if we go up from 62K, if I take a position here, right, it's bang in the middle of 52 and 62. If I take a position here at this point of time, we'll be looking to cut at this level, basically 55. If it goes down, if it goes up, basically 62K, take the profit and then sit what happens next. Because these are the high value nodes where a lot of trading has happened. So it won't be clearing on day one unless some ultra positive news comes in, like Bank of England or Fed is adopting BTC as a reserve currency.
What is your concern, if any, if Bitcoin doesn't reclaim the 62K price level by end of week? This is the line in the sand that Benjamin just shared.
52.
No, but he was saying he really wants to see this reclaim 62K by end of week. Otherwise, he's concerned we're gonna go much lower. Does that show any concern at all in your mind?
No, I don't think so. I don't think we'll reclaim 62K. I think we'll hit 62K. And I know his bias is saying if that would be really bad because we are going even lower. And we have lost 200 DMA, tested it, retested it, not working out, going backwards. So there is no point. We'll be sitting at 52K and we'll go further lower down. But I don't form that long view. I'll go at 62K, see what is happening. If we reclaim it, then well and good. If we don't, start getting out of the market and see where it stops.
Well, okay, so you guys have your price targets looking a lot at either the structural stuff from a technical analysis standpoint, looking a lot where the liquidity appears. There's been a lot of discussion on X just about the funding rates being reset. Does that factor at all into where you think this is going? Is that a positive, neutral? Does it matter as much?
That was definitely a good reset. I mean, it was very good. I mean, after a long time, we actually saw very good negative funding. But that's the thing, like we obliterated a lot of longs. The open interest basically got wiped out, right?
Yeah.
Nearly 1.5 to 2 months of open interest got wiped out. When that happens, you will naturally see funding go deep negative, basis goes negative, and you get a good shot at getting into good spot positions, and then the market balances itself. And the market balances itself, like what we are at, what position we are at 57K to 58K. Now what happens is the question. Are we going to keep getting consistent bid depth that keeps getting thickened and bids keep coming? There is taker flow, in the sense people who are buying BTC on market orders, because that is the real demand. Buying on limit order is not like real demand, it's still demand, but people having that FOMO to buy on a market order is where the real demand comes in. So right now we are in no man's land. We do not know whether this is enough or this needs more push. So we need to go down, get more bids inbound. We don't know that yet, because this whole down move was not as a result of anything that was happening on Bitcoin. Like not unlike what happened in July or March or in April, where you had German government selling or US government selling or whatever it is. So none of those factors was basically the reason over here, at least for BTC is concerned. The main reason was, the rate cut delay, the global carry trade situation, and then jump basically liquidating on ETH side. But that was still ETH. ETH is where there was a further delay. As far as BTC is concerned, this is just a macro effect. which also means that we have to wait for a bit of clarity from the macro side. If stock markets start going bullish again, then we are in very good shape. We probably don't have to worry too much.
There's a lot of actually underlying tension in what you just said, which is basically that we had a exogenous event. We had something that happened completely outside of the market that seemed to have this massive impact on us. So really exposing the fact that this is really a beta trade to equities and to a larger to these other markets, which then leads me to believe or ask the question, how sensitive are these markets if we see more turmoil in the next 3-6 months? I mean, we just saw a 20% drop for a lot of these. Is another 20% drop in the cards? Seems like it very well could be. We don't have diamond hands for the rest of the market.
Well, if there is going to be another 20% drop in stock markets, like we don't want a 20% drop in stock markets because that means recession or a 2008 crisis. Stock markets can't handle that big of a drop. But if that is going to be the case, Bitcoin is not going to manage to diverge from it. So do not count. In that case, the bottom is definitely not in. But we don't have a clear picture about that because when you take even stock markets, everything is holding up at a certain support level. Like quite literally, everything is holding up at a support level. When it comes to altcoins, everybody is holding it at a certain support level. Most of them have already given back all of their gains, right? So this is not a spot to say that, okay, we have started a bear market, or to say that, okay, this was just a small hiccup and we are just going to 100K right away from here. That is a very tough argument to make over here. That's why 62K becomes the very important zone.
Well, we have a question here from the audience. They say, when the Fed eventually cuts rates, will it be bullish for the stock market and Bitcoin, or will there be more blood? Like to hear the counter argument. And I think Ben actually posted a comment on X this morning from a macro analyst citing the fact that the Fed is in a bit of a checkmate position where whether they raise or lower rates, either way, the stock market's going to be impacted. Amit, do you have a perspective on that? Are you looking for the Fed to cut rates and to inject liquidity, or are you neutral on that? Just really studying the charts and looking where to trade. How do you think about that?
I think just to have an overall view on that, this time I think the rate cut will be bullish for the market. Specifically, the reason being is because there are smaller companies who are bleeding very bad from the last 6-7 months because the credit situation is really, really tight compared to giants in the industry. So all the run is being fueled by these companies like Nvidia, Apple, Amazon, at the back of AI narrative. So rate cuts this time would be for the basically for the smaller companies to fix their credit lines rather than for the big giants, because that's why we are seeing the correction there. And small companies are already basically struggling. So I think this time specifically, rate cuts would be bullish rather than bearish. Historically, they have turned to be bearish, but I think, yeah, we'll see a reprieve this time. Again, that's just a view, but I would still look at the price, what the price is doing, what the ranges are there, and then play accordingly. But be very careful during the days when these discussions start to happen or when these changes start to come out.
Benjamin, do you agree these initial rate cuts would actually be bullish for the market, perhaps a different impact on later rate cuts?
That's still the growing consensus that this time the rate cuts will be bullish because we're not coming from a hard landing perspective, we're coming from a soft landing perspective. And all those arguments, like so many macro analysts have been putting out very good information about it. We have also published so many espresso articles for the past 8 months, in fact, using all of those theories. My fear continues to be the case that there's still lack of clarity on multiple fronts, right? So it's not just the Fed rate cuts, it's also about the political agenda. Like all these things also play a role over here. There is a lot of uncertainty, which is why the best guide over here is still price, right? So unfortunately, you cannot rely on any of these wallet-based analytics or anything for that matter on a lower time frame right now, at least for this quarter, to make a decision and say, okay, this wallet is buying, and that's so bullish. No, they're too tiny in the macro picture of things. So do not bother based on that. What you have to bother is how good are the order books, how good are the support levels, have we wiped out enough leverage, have there been enough liquidations? Okay, good enough to buy. And hopefully Jump Crypto or Jane Street or more crypto players don't go crazy and sell because CFTC is screwing them, or their over leveraged JPY trade is done. Like all these market makers are on leverage, so that's why they're feeling the bite when anything other than normal happens. It's tough for them. They can't manage because they have to pull out liquidity. I was looking at the 1% order book depth a few days ago, and basically from nearly 156 million in depth on spot markets, we dropped to 86 million in depth. So we basically halved in depth on a 1% range in BTC spot markets last week. So which means that there were a lot of market makers basically getting out of the game, whether it is temporarily or whether they'll come back later. We don't know that yet, which also means the books are going to take a bit of time to stabilize. It's illiquid, and that's why we were able to see such a quick move upside as well, together with the rest of the assets all over the world. So BTC did not do something by itself. It was still a correlated move. It still has a 80% correlation to Russell index. So I think all of us need to hold our horses a little bit when it comes to arguing that, hey, this looks like a V recovery all the way like 2020 COVID crash. It's too much of a stretch to say it was a COVID crash V recovery. Bitcoin used to do this on a daily basis back in 2020 or 2019. So yeah, we have to just wait a little bit. 62K is the line that you have to watch. The longer we stay below it, it gets riskier.
Okay. Well, so hopefully, Ali, Alba, if hopefully I'm pronouncing your name correctly, that gives you some sense for two perspectives and what they're looking at from the Fed, and they're doing their cuts. I think you guys have been pretty clear on your price targets for Bitcoin. Really going to have to see how the rest of this week play out. If for all those who are listening here and hopefully listening to the replay afterwards, if you want more of that macro analysis, I would definitely suggest signing up if you haven't already to the Espresso newsletter that Ben's putting out. I think he's even looking, maybe even upping his frequency. He's probably going to kick me under the table for saying that afterwards, but definitely getting into some of that macro analysis, trying to bring everything together beyond what we're going to be doing here more from a price perspective that we're doing here once a week. But definitely go check that out. You give a little bit more of the tea leaves and where everything is headed. I want to talk a little bit more about price, get a little bit more into Solana, Ethereum. I also want to get your take as we do that. We're going to talk a little bit about some of the questions that came up after this sell-off, just from a market perspective, a trading perspective, how traders can be thinking about that. But let's start with Solana. I think it had an interesting story. We were talking offline just about the fact it really seems to be the outside of Bitcoin, it is the prime mover within the market, right? It used to be we would look at Bitcoin, then we look at Ethereum, and then the rest of the market. Right now, and it has been for several months now, maybe 6 to 9 months, it's Bitcoin and then Solana. As I mentioned at the top of the show, it sold off and went all the way down to 110. I think it was trading the 160, 170 range before over the weekend. Last I checked, it was trading at 155. So it's had a really strong pullback. What are you looking now at Solana? Benjamin, I'll start with you. What are you looking at now in terms of line in the sand? Can it take its own trajectory? Does it need Bitcoin to break above that 62K? What are you looking at?
Solana cannot run on its own. That was very clear when we saw what happened on this August open move, right? I mean, look at it. It was somewhere around 193 and it was happy to go all the way down to 110. Does that look like a token which is ready to run on its own? No, it's not. You need stability. You need stability from BTC, and you need the macro picture to be clearer so that it can run. Otherwise, after the big move it had last year, if you look at it after the March, it has literally done nothing other than do wild swings, has had very good recoveries, which is why it's still been a favorite, right? Because also the other meme coins were doing wild swings, and we have our friends like Murad basically go crazy on how WIF basically pumping 30% is so much better than Bitcoin pumping 5%, from the bottom. So those type of arguments all come in because, these are much lesser liquidity assets comparatively. And, it's lower market caps, 72 billion at most. It just flipped BNB today. So, I wouldn't count on Solana being, trying to flip BTC in market cap or something yet. Not even Ethereum yet, for that matter. But when it comes to strength, there is definitely demand in Solana compared to other assets when it comes to recovery. So whenever there is a market bottom that likely gets hit, Solana is able to recover the fastest with a much better beta. This is fact. But even if BTC goes on sideways, can Solana run like it did in Q4 2023? That is debatable because the casino that operated back then, like in December, for example, there were 5,000 SPL tokens that launched in Solana, just in 1 month. Right now in pump.fund, we have 1.5 million tokens. Okay. So the distribution of liquidity is so bad. So even if you were coming in first time into crypto this year, and you're a kid who has like 100 sol or 200 sol, whatever it is, you're 20 years old, you're so excited with the hats and dogs and cats and all that, and you come in, but the problem is, yeah, you're basically stuck in the pump.fund, right? Now there's so many over there, so much distributed liquidity. It has the same fractional liquidity problem that comes in the same way like Ethereum has, right? Ethereum has now so much distribution with L2s. So that's why it's finding it difficult to, gain momentum again. Now with Solana, when it comes to meme coins, pump.fund basically marked the top in a way so far. So we have to wait and see based on price is what we can evaluate right now, because when it comes to developer data or any other activity based information on Solana, it's doing well. So there is no reason to doubt Solana's performance based on other activity metrics. I know the Ethereum and Sol fanatics are basically fighting whether the data is real or fake and all that. I am not getting into that because it is very hard to do on-chain analytics for Sol. Even OHLC data is typically hard for Sol ecosystem. So I'm not getting into the argument whether the data is right or wrong, but price basically tells you everything. And price basically tells you so far the ecosystem is strong, which is why over here I want the green block to be flipped first. Then I get confidence we are going to 175. And if that is flipped, then, let's go to moon on Sol.
So there may actually be some good opportunities if 175 sits at that resistance zone, it goes all the way back to 135. Would that be a buy zone for you? The 110 to 135 range?
So my buy zone would still be 146 levels, and I want to see right now what happens with price. But if let's say we flip 165, I would just take a long to 175. And then once that flips, I would take a long from 175 to 200 and ride it up. That's how I would do it, because it's become a very risky market. If I were to buy spot higher than lower, I would buy higher than 200, take a bigger risk, and sell higher, buy higher and sell higher, because this is still a sideways market for like 6 months now. We don't have a confirmation.
I want to get Amit's take on this. When you're looking at the Solana chart, you just had a couple of price ranges coming in from Benjamin. I think we have more the macro view of the benefits or the fundamentals of Solana, which we could debate here. But just looking at the chart, what do you see? And are you looking at the same levels here, and are you more or less bullish on where Solana can go in the near term?
I mean, looking at the price chart, right, on a daily time frame, it's again smack in the middle. Either if it flips 155, it'll test the channel that is coming from the top trend line. If it breaks that, then I'm looking at 185. Take a position here with a stop loss around 140, 150, with a take profit at 185. And that's where you stop, because then you want to see whether it can actually run or it's going to drop back. But if it can't clear 160 level, it's going back to 125.
And is that your buy zone? That low? I mean, we heard from Benjamin talking more about the 146 range. Are you waiting for a lower price point, just more confidence that it's actually going to rebound from there?
Yeah. I think 146 is, again, I won't buy at 146 because I will wait and watch at 146 because that's your 200 EMA.
Mm-hmm.
At 140, if it breaks 146, then it's going to go down. But if it doesn't, then yeah, that's basically start dipping the toe at that point. I would rather wait and watch because there is no reason for it to run from 146 because 146 is kind of a in between level. It's in no man's land.
So a lot of traders are always trying to see if they can front run the market, which of course with these multi-trillion-dollar algorithms and auto trading, it's very difficult to do. But I could see someone looking at this saying, "Wait a second! If Bitcoin is able to recover that 160, the 62K range,
165, yeah.
let's say 62 to 65 range, do I make that trade on Solana? It's going to catch up regardless of price level." How do you think about that question? How would you respond to that, Amit, to sort of front run that with Solana?
See, the problem with Solana is not a problem, but yeah, it's an opportunity because if it dumps 10 to 15% easily. So if you're trying to front run it, you have to hedge your position, not hedge, but you have to basically take your positions very tight on the risk management side of things. So your entry levels and the exit levels has to be very clear, and you have to sit on the chart if you're trying to front run it. Because if BTC goes to 162 or 62, right, then we are looking at Solana going to 175 level this here, and then see what it does. And then it's basically driven by BTC, but the only thing is it moves harder when the BTC moves. BTC moves 4%, Solana moves 8%. So if you want to front run it, yeah, it's a risky game. You can do it, but yeah, you have to sit on the chart and look at your positions day and night.
We have a question here we can maybe wrap up Solana with, which is asking, what about SOL options? I think both of you guys are trading spot, not the options market for Solana. Is that correct?
Yep, I'm not. Benjamin?
Okay. Benjamin?
Options market, the way I look at options is basically, buy the crash. So I will go for buying call options, the cheaper call options, when there is a crash. So this time we couldn't actually because we had too much to manage. But ideally, what I would have done is bought near 125 a lot of calls on coin call for Solana, and then just written it up. Buying calls during very good liquidations in coin call actually has been a proven working out strategy in profitable way, because in July the purchases made at that bottom basically gave a 3.5x return. So it's a very layman way to look at it, but it works. So you don't have to always kill your brain with gamma, theta, and all that metrics. To make it easier, just buy liquidations. During liquidations, heavy liquidations, buy call options on coin call, and it often works out very well.
Let's actually double click on that. I want to get more into the market psychology of rebounding or reacting to a market sell-off like we saw on Monday. You guys just gave an opinion both on Bitcoin and Solana, where they go next, potentially some price targets to evaluate. On Monday, everyone was sitting there asking the question, because I know we had this chart, the chat in our Discord, saying, okay, well, how do you position now? That's assuming you've got some dry powder. Are you looking to immediately try to deploy? Should you be looking at the options, the call options, inexpensive call options as the options get repriced on an exchange like CoinCall? Or does it make more sense to sort of let the factors or the movement kind of play out to give you a deeper sense of what might happen next? I mean, my take is on Monday when I looked at the charts and I saw the sell-off, just as a layman, I thought to myself, it's possible that this is a sell-off like I used to experience in 2017, that it was a buy the dip opportunity and you're just going to go back up because we're in a bull market. But my sense was that I just didn't know where exactly the sell-off was coming from and how deep this could go. So I was a little bit more hands-off. I wasn't as bullish ready to take a trade. So Amit, I want to start with you. When you see these kinds of sell-offs and there's just lack of information of what's really driving it, what is your approach to think about, okay, how am I going to position now? Assuming I have dry powder, assume I'm already in the market. How do you go about that?
So when you see a sell-off like that, my first reaction is to stay out of it, because there is no point when the price is steamrolling like that to stand in front of it, because you don't know what is causing it till you understand the situation. Because there was, if that Japan carry trade was a big enough event, it would have carried down all the way to 42K, and there was no point buying the bottom here. So when the situations like these happen, we did take the trades, but not on Monday. We let the Monday finish and then started looking at, okay, now this is Tuesday, half day Tuesday, nothing major is coming out, nothing is happening, let's start dipping the toe. And then you don't go and say, okay, I'm allocating 100% of my balance here. Then you take a portion of your balance and then you start trading with very clear, this is where you design the trade. Basically, you're not interested in, you don't think this is going to go to the moon straight from here. You know the sell-off has happened. There is no reason for a momentum to stop. A day has passed. Price is starting to recover. Give it some half a day, then start taking the position slowly. And then you have your clear levels cut out. And then you play with that.
Benjamin, what's your strategy?
And the thing is, what we need to all remember is that overall, the entire crypto market went into a weaker market structure. When it comes to at least Bitcoin, or let's say even if you take ETH, even the most layman metrics, we started losing all of those support levels. So, we could have gone much deeper as well. So like Amit says, which is true, like we would have gone way more deeper and you would have had all these alerts keeping on triggering, because everything else is matching. There's very good order book depth, all of it. And it doesn't matter because the unwinding is happening somewhere else. And the correlation bots will basically drive everything down, right? So that's where it gets difficult if you don't have a picture. Let's say I'm buying the spot and I don't care about for next 2 years or 3 years, and I don't have loans that I have to keep the cash for. I don't have huge leverage positions which I need some more dry powder for. You have to to synthetically think about what your portfolio is. So if you have already some heavy positions which you have bought higher, or let's say you are already in a drawdown somewhere, or you are in a loss somewhere, or you are having loans which are going to get liquidated somewhere in DeFi side, then you need dry powder that you need to hold, right? So now, is it fair that you buy that 52K bottom, 50K bottom, and like still be hopeful that this is all going to 100K? Or are you going to hold that and manage your risk on the entire portfolio that you have? I would go for the latter. I wouldn't go all in on the market. Always you need to keep some dry powder, especially when you have a diversified portfolio. Let's say you are in loans, you are in Pendle, you are in call options, you are in a DeFi prime brokerage. So you have to manage accordingly. So just because price went to 50K, and there were a lot of these alerts, doesn't mean everyone can do the same thing. It cannot apply. We had all of those alerts triggering. We had Rosie triggering, but would I go and tell someone, like go all in at that particular alert, or the combination of alerts that we were getting? It was all there in the Telegram channel. No, we can't, because it depends on their portfolio.
Well, I want to drill down a little bit more into that risk management lens that you just talked about. Unfortunately, there's a characteristic in the crypto market, which is just YOLO, which, I just had a conversation with Kingfisher that we'll be publishing very shortly. And one of the points that they brought up is that so many traders look at their liquidation levels when they're doing perpetuals as their stop loss. And they're really not thinking about preserving capital. And then when I think about something that just happened, like we just saw on Monday, where you see our market sell off, a lot of people are saying, okay, how do I get the biggest return? And what you just talked about was managing your risk. So when you're talking about starting to size up opportunities, you talked about the top of the show looking at Bitcoin. If something's going to rebound and it's the leader of the pack, it's still the number one asset in this space, it's going to be Bitcoin. That's the place to start. And then we had the other question just a minute or so ago about Solana. And you even just said that you can see a really large return on those pullbacks. So how do you think about saying, okay, we don't really know about the market. I'm going to put some cash in. I should be looking at Bitcoin, or I want to go a little bit larger. I want to go more with the Solana option now that we've seen this pullback, because I want to see a larger return on the pullback. How do you think about those two options as you're starting to design how to get back in from a risk-adjusted perspective?
Okay. Once again, the issue is there's no blanket route to do that. Now,
Mhm.
if I were a full spot trader, okay, if I just trade spot, my life gets a little easier, to be honest, because I just have to basically wait for crashes, right? And then basically wait for all of these metrics to say, okay, we are probably topping out, we are very overheated or bearish divergences or whatever, and then keep on rebalancing that way. The difficult part why even spot traders still lose money is because they FOMO after the breakout, and sometimes they are wrong on judging where the breakout has happened. Now, this is spot traders. Now, then comes spot plus loan traders. So if we go based on, for example, Ben Lilly, what he typically does, he does a lot of DeFi, right? Now, if Ben were to take a lot of Aave loans or compound loans and then use that liquidity for something, and let's say he had his entry at 65K because he wanted to take that and go and buy some more meme coins or invest into some of the projects, anything, right? It's normal that people take DeFi loans. Now, if you have your liquidation level at 60K and price is coming closer, are you going to use your dry powder for saving your liquidation, or are you going to use it to let it liquidate and buy lower? This is a very difficult decision for most traders, right? So this is just people who trade spot and DeFi. Now,
Mm.
add to this combination of doing perpetual futures, and then add to the additional combination of doing options. The whole thing gets much more complex. So no straightforward route comes in that easily. And then on top of this, we have people who basically take loans from DeFi prime brokerages and also centralized prime brokerages like Galaxy Digital, FalconX, or LTP, and all these big prime brokerages. So you can have a lot of dry powder. Price can hit your 50K level. You can have all those alerts, but depending on all your leveraged, positioning is how you have to decide whether you want to deploy that dry powder or not.
Right.
Because in this specific case, what happened this week is that we lost all the key levels. We are still not out of the hoods. The recovery so far has looked great. Main reason why it has looked great is not because BTC was able to bounce from 50K to 57K, but because Solana was able to bounce from 110K to 160K. And the ecosystem tokens of Solana has bounced hard. That has completely shifted the fear narrative once again to a FOMO narrative. People are shifting from FOMO to fear, fear to FOMO within a matter of 24 to 48 hours. And that is primarily because of Solana. And Solana is not able to execute things individually either. So it's a very tricky zone, which is why you can look at ETH also sometimes as a meter. So is ETH basically telling us we are in a bear market? So I have that argument sometimes.
Yes, I know. We're going to get to ETH in just a moment. I want to wrap up this discussion asking Amit. I would say, I think one of the points I take away from Benjamin, what you just said, was that people need to really evaluate the complexity they have in their trading portfolio, knowing that as you start to add leverage and you start to have all these different products, your ability to react and execute effectively is going to go down. You don't have the tooling. And even if you have the tooling, it has to be super sophisticated to make it work. So something to consider for all the traders. I want to come back to you. In the latest article from Ben, in Bumpy Ride, he alludes to a conversation you and other traders were having where you were talking about knowing your strengths, and you were asking some questions. And some of the questions included, what algorithms are you deploying? How many milliseconds does it take for your order to get executed? How long do you plan to be in the trade? Will you sit in front of the chart and manage the trade until you're out? And really talking about what kind of trader you are. So I want to ask, can you just expand on that just a little bit for all the audience here that, again, they're looking at whether or not they want to deploy dry powder right now. And they're asking themselves, what's the best bet? What's a good lesson they should take away for the next time they see a market pull back like this?
So tooling plays a very key role when you're trying to basically catch the knife, or because if you are trying to catch the market and you send the orders, they don't get executed because it's adding to your anxiety levels. So what you want is when you are executing the trades, because you want to be in and out when in a situations like this. So the tooling part becomes really important there. To catch the bottoms like these, right? It's hard. it's not straightforward. You have to be sitting in front of the chart, looking at the price action straight back, not at the higher level, looking at basically going 3-minute charts and see what the price is doing, and then drawing the levels there and basically adjusting how you enter the market. So that plays a key part. And the thing is, the question that the discussion we were having was, as a trader, right? It depends how much dry powder you have. That plays a key role in how much risk you can take. So if you have big bags, then you can basically say where the lower lows and lower highs are and keep buying there. So it becomes easier. But if you don't have, if you're starting with 10K of your account, you can't expect to see 20%, 30% drawdowns, because then you have nothing left. And then you cannot enter the market. Then your entry optimization becomes really important at that point.
And okay, so we'll wrap up this discussion. I think some good perspective for all the traders out there who are trying to ask, how much should I be trying to really find the larger payday off a market like this versus being more systematic and thinking a little bit more about the risk. And, guys, I just want to say we've got some really exciting news to be coming out on some products coming out from JLabs Digital. Can't say too much today, but we'll be talking about it coming here on XC and definitely the trading pit. And in the following weeks, we'll be talking about a little bit more, sharing some of the results. And it has to do with managing the trades as well as managing the risk. So definitely an interesting product, I think, for all those who are out there looking for a way to, I would say, adjust get some help with some of these trades. So let's move on to the final topic, which is Ethereum. We were talking before the show started about the fact that it just feels like a dead duck. In the previous 2 cycles, it was one of the first assets you were going to look at after you went from Bitcoin. And yet on the latest drawdown, it's basically erased all the gains from 2024. It looks like it's going into 2023. And there's so much discussion where we have the discussions on X that it's just dead, that it can't compete with Solana now that it's made the upgrades. The fees are so low, no one's using it. I'm going to start with you. A couple of shows back, you said, hey, it's great. It's got a range. I like to trade the range. I don't care if it's mooning. Are you still looking at it that way, or have you kind of given the thumbs down on Ethereum for now from a trade point of view?
If you look at my screen, right, I mean, it has dropped from before it was BTC, ETH, and then Sol and anything else. Now it has BTC, Sol, WIP has come forward, then ETH. So it's the sequence of things I look at. So ETH is way down the list now, because as initially at the start of the show, when Benjamin said it has a value, but it's not moving. So there are ranges, but you have to be sitting on that ranges. You have to be managing trades for a very long period of time now. And for that reason, it looks like Ethereum is, for the time being, I won't trade Ethereum. I would stay out of it, rather jump on Sol and do something else.
Just a little bit more movement, a little bit more volatility.
Yep.
Benjamin, I think your words were even sharper when you were discussing Ethereum.
Okay, let's put aside all our biases for a moment. Okay, let us put aside everything about on-chain, everything about what Ethereum as a big charitable foundation has donated towards decentralized banking and all that crap. Let's just look at price action and think from a very technical perspective, absolute technical perspective, a layman level that YouTube and TikTokers basically explain. Now, what we are looking at is 200 daily moving average. Let's just scroll back and you will see that, in a bull market, the time period that Ethereum basically falls below the 200 daily moving average and holds below is much shorter. You get those deviations basically happen. When do you see a huge drop like what we have seen happen? The example is 2022, when price dropped from 3,400 all the way to 2,099. Now, let me, go forward in time traveling, and what do you see? We have basically dropped from 3,200 all the way down to 2,099. And below what? 200 daily moving average. Now, I want to be bullish on ETH because I have a partner who's extremely bullish on ETH. I like him. So I want to be bullish on ETH, and it's something that I traded a lot back in the BitMEX times and made a lot of money. So don't get me wrong, but ETH is not, obeying our words. If this basically goes back up all the way and tests 3,200, tell me why it is not looking like 2022 April, where before the Luna crash, how ETH was. What is so different? This is my fear with respect to ETH. If I think from a very layman perspective, if I put aside rate cuts, if I put aside all the macro narratives, the structure of ETH is so weak. The performance has been very weak. So I don't know what it needs. Like Larry Fink basically put all his reputation on the line and decided to go and fight with the SEC and everyone to bring ETH spot ETF. And for some reason, he decided Q3 was the best time to do it against my best of advice and emails that I sent to him. So, which is fine, his
And they were
decision.
well-written
but
emails. Yeah, they were
Yeah,
very persuasive.
yeah, I used ChatGPT and all that, and still he failed to read it. But this is where we stand. So, how do you want me to do with it? Do we buy it here and sell it at 3,200, or do we sell it at 10K? Do we look at it as a huge buying opportunity? With all my heart, I'm not able to look at it that way. I'm so scared seeing it ETH and trying to translate it to the rest of the market. I'm even more scared if I look at ETH. So I'm trying to tell our Panda development team a way for me to blacklist ETH from appearing in my ticker. Actually, I think they figured it out, because if I go in Panda and type ETH, it doesn't appear in the top list. So I
Oh
have to
man.
scroll down to get ETH. So they already understood that I'm scared of ETH, and they have blacklisted it for me. So nice development team we have. Anyway,
We're
but
terrified for ETH. So
I'm
okay.
terrified of ETH, honestly.
Yeah, structurally in the near term, this chart could really not be more bearish. And really, I think your argument, it's been in a bear market for a long time. So I think from a trade perspective, it doesn't give enough volatility to really give you the boost, which means other assets, including Bitcoin and Solana, are a better trade in the near term. What about long term? Structurally, what would you look at as starting to be that price that you would start to say this is a generational type of buy? I mean, and maybe that's all the way down, going back to prices we saw in the bear market of 2022, 2023. Is there something like that you would look at that your interest would start to peak? Or are you looking for more of a change in the narrative? What exactly would start to help you
So
peak curiosity?
whether it is ETH or WIF or Solana or Popcat or Cardano, whatever it is, it's difficult to say this is a generational buying opportunity. Okay, like at least this price is not a generational buying opportunity, in my opinion. We have had generational buying opportunities. BTC is where the entire run up all the way to 70K is also a generational buying opportunity because of all the macro fundamentals that is attached to BTC. So when it comes to ETH, it is still inflationary at the moment because there's nothing much happening. The GUI is low, gas fees is low, all the activities are basically happening in L2s. Yes, a lot of RWA based interactions are happening as a result of BlackRock and all the Franklin Templeton funds and everything, which is all great, but nothing has translated into on-chain activity yet that we have been able to take notice of. Normally, on-chain activity follows price. So the argument is that if price goes up above 4K, on-chain activity will be back, gas fees will skyrocket, and we'll say Ethereum is healthy again. But short term, there's so many other things to play with, which is the main argument. So you want to keep it in ETH or do you want to keep it in BTC? It's still performing better. You want to keep it in a better performing asset
Yeah, but
until there is a flip.
I think
Ahmed, coming back to you. Yeah. Chime in here.
yeah, but what I think is there should be an allocation on ETH because it is a good buying opportunity. It won't go to 10K straight away, but it is a good buying opportunity. And if your time horizon, let's say, is 1 year, ETH is a good place to buy. I mean, yeah, you won't go and buy 100% of your balance for ETH here, but if you have some allocation on ETH, I mean, it will pay off dividends in the long run because, as Benjamin just said, right, RWA is just picking pace. The reason it's not moving is because there is not much of activity. There is no new innovation coming in. But who is to know there is some new unicorn comes up on Ethereum all of a sudden and it starts to run, because we know when it runs, right, it can do big candles, god candles again. So I would not discount ETH completely, like blacklisted, but yeah, won't go 50% of it on ETH either.
So long-term bag, if you're willing to hold it for a year,
Yeah.
these levels aren't so bad, but in the near term, when do you go just absolutely FOMO in? At what price? Do you have any price point below here that you go, okay, my bags are in, I'm just loading up?
From this point onwards, right, the way I would buy is basically see where the peaks and troughs are, and then basically start buying a little bit on the when it starts coming to those MSB levels, and then go from there on spot. But I would be really happy if it recovers to 3200 level, and from there we got to go. That's your DMA level as well, and that's where a lot of trading activity happened. So that would say whatever happened in the market, that was not in control of the ETH, and it's back to the same levels, and then we can see a run for ETH. But at the moment, it's just dead. It's just doing nothing.
It's just dead. I think that on that note, we will just wrap up the show. Benjamin and Ahmed, thanks so much for dropping by. And to all the audience out there, thanks for joining us here on YouTube. We unfortunately had some issues, not able to do it on X or simultaneously post to both. We hope to be able to correct that over the coming weeks. Apologies, the producer's working hard on getting all of the issues cleared up, but you'll be amazed what the software does to that. But it's an interesting time in the markets. You're definitely going to want to be checking in on all the different channels where we're publishing information. You have Espresso that's coming out from Ben Lilly. You got this show coming out, and we have more interviews coming out. I mentioned that coming out from Kingfisher. Definitely hit the like and subscribe button to Exchanging Goods so you're aware when that comes out. And over the next couple of weeks, we're going to have some interesting products that are going to be launched. You're not going to want to miss that. So definitely find the Telegram channels, find the join us here on Exchanging Good on YouTube. Follow us on X so that you can be aware when these are coming out and see how it fits into your portfolio. But until next time, I'll leave you with the same PSA I've been saying for over a year and a half. Even more important, like weeks like this, definitely have some dry powder so you can deploy at the right time. You never know what's going to happen. This is Marconi White signing off.